Shireen Bhan at the CII National Council meeting for CNBC-TV18's Mega CEO poll. Over to you, Shireen.
Ladies and gentlemen, welcome to the CNBC-TV18 Mega CEO Sentimeter. I'm Shireen Bhan, and we're coming to you live from the CII National Conference here in Chennai. And of course, this is an engine of growth for India, and we are going to be talking about what next now to drive reforms and to drive growth for India. Before I get my audience and the CEOs present here, this is one of the largest platforms that you will see. Almost 80 CEOs present here under one platform, live right on CNBC-TV18. Before we get the Q&A started, I decided that this was a good opportunity, since we have everybody here in the room, to actually do a dipstick survey and sense and gauge the mood of the nation, to gauge the mood of India Inc. So without further ado, let's get started. My first question, and this will of course result in a show of hands from each one of you, so I would request you to raise your hands depending on which way you decide to vote. With the GST boost coming in, the Chief Economic Advisor suggests that growth will be higher, perhaps closer to the upper end of the band that was presented in the economic survey, which was 6.8%. What is your growth expectation for FY26? Ladies and gentlemen, option 1, 6.5%, option 2, 6.8 to 7%, and option 3, more than 7%. Those of you who think that growth is going to be 6.5%, please raise your hands. Okay, no hands here on 6.5%, between 6.8 and 7%. Okay, quite a few. And those who believe that it is likely to be higher than 7%? Okay, so that's the mood of the House. Just what the Chief Economic Advisor told us, 6.8 to 7%, a little better than the economic survey's estimates. That's the mood as far as industry is concerned. The second question, and again, I'd appreciate a vote, a show of hands here. Do you see inflation easing further, and do you expect the RBI to cut interest rates again? Yes or no? Very, very simple. Those who believe the RBI will cut rates, a show of hands, please. So most people in this room do believe that the Reserve Bank is going to cut rates. And the third question to kick things off here, we've seen what's happening as far as the currency volatility is concerned. Do you expect the rupee to end, option number 1, in the current band, which is between 88 and 89, to be stronger, which is below 88, or weaker above 89? Those who believe that the rupee is likely to trend in the current band, if you could raise your hands, please. Okay, and those who believe that it's expected to be stronger, that is above 88, just about 2 hands in the room, and those who expect it to be weaker, that's below 89. So majority expect the rupee to be in the band between 88 and 89. So let's get straight off. Rajiv Mani, I'll come to you to start with. What was your vote, 6.5 to 6.8 or 6.8 to 7%?
No, 6.8 to 7%.
Okay, and you believe the GST is going to help drive that number?
Yeah, I think GST will definitely help. I think firstly, the first quarter GDP growth was also was a very positive surprise, and from what we are seeing with the monsoons and the uptake because of GST on the consumption, just some of the early sentiment that we are seeing. We haven't seen the numbers as yet. I think 6.8 to 7% should be achievable. We are also seeing, if you look at steel, if you look at cement, the broader trend on the construction sector, which contributes a lot, that's very positive. We just saw yesterday mining sector is starting to show very positive growth. So I would say overall 6.8 to 7% is probably a safe number to go with right now. I think India's bigger challenge is not the real GDP growth. I think it's the nominal GDP growth. Yeah. Because from a tax revenue collection, from a fiscal deficit number, I think that becomes more relevant. I think that's where we'll have to see if inflation continues to stay as benign as it is, and with GST it may come down a little bit, currency stabilizes, then the likelihood is that the nominal GDP growth will be a challenge. So we're hoping that if RBI was to reduce the interest rates, in some ways, push for greater growth, and then if that has a mild impact on inflation and it comes to closer to 2 to 3% in that range, if it ends in that range, then hopefully the nominal GDP growth number should catch up.
Mr. Mukundan, what did you vote when I asked whether interest rates are likely to be cut or not? Do you expect the Reserve Bank and the MPC to deliver on another rate cut?
I took a safe one. I actually voted with the president.
Which way did the president vote on that? You were looking at him. So yes or no on a rate cut?
Yeah, we do believe, I think there'll be I think we are in an era of, I think, a continuous rate being eased, because I think the inflation trends are down, and the long-term trends on inflation are also pointing towards going to be, and with hopefully we are seeing the peak of the tensions, trade tensions. We are the peak in the sense that it may last 90 days or 100 days, but I think post that again, I think the trend will be easing it down. So all directions are in the same direction. Clearly, I think we are in a very good spot in many ways. If interest rates are going to be benign or coming down, and our many things which government has done, including if you look at what they've done in power sector, what they've done in the roads, the logistics, all the every aspect is now in place. So our own expectation is this is a time when we need to be positive. I think industry is a bit cautious because of all the tension around, but I think once that eases, you're going to see a massive push going forward. That's really the way I see it.
The question is, what is the timeline for that massive push going to be? But I'll come back to you in just a second on that issue. So industry expects rates to be cut, or at least hopes that the RBI will deliver with another rate cut. And the consensus in this room of a large number of India CEOs is that growth is likely to be between 6.8 to 7%. You know, I should have polled a question on gold as well, Mr. Muthoot. Let me come to you. Gold prices at record highs. I mean, you know, you're talking about peaking as far as trade tensions are concerned. Any signs of peaking on gold prices?
Gold has been always lucky with Trump, and Trumpism is driving gold. And the uncertainty in the global economy is driving gold prices. I think now the new gold is silver, with silver going to be the next driver of investment for the common man, because gold now has become unaffordable.
Gold has become unaffordable. Yes, I would imagine consumers will agree with that. But do you expect the rally to continue?
I could say that 40% of the Indians have become wealthier now, with the gold prices moving up 40%.
That certainly is the case. But do you expect prices to continue to edge higher from here? And what's the expectation on silver?
Silver would be around 45 is what market outlook, and gold would be somewhere at 3,800 per ounce.
3,800 per ounce. So the rally is likely to continue. Mr. Trump has been good for gold prices.